Good morning and welcome. My name is Bjarke Smith-Meyer. I'm one of the finance reporters at Politico's European headquarters here in Brussels, where we're coming to you live. And I have the pleasure of moderating today's panel discussion on the role that the finance sector can play in Europe's green recovery. Before we begin, just a couple of quick reminders. Don't forget to submit questions via the Swap card app, which is in the box called Live Discussion on your bottom right-hand side next to Live Stream. And please do get involved with our live poll, which is presented by the London Stock Exchange Group. And that poll tries to answer the question as to which upcoming EU legislation will have the greatest impact on the transition to a net zero economy. Is it A, non-financial reporting directive, B, the green bond standards, C, technical standards and guidelines of the EU taxonomy, or D, none of the above? You can tweet about this event as well on the hashtag PoliticoFS. Now, before I introduce my guests, I would like to set the scene for you just very quickly. It's been 1 year that we've been dealing with this pandemic, unfortunately, but now at least there is a vaccine and people keep talking about the light at the end of the tunnel. Now, the rollout may be slow, but people are talking about a recovery in the second half of this year in particular. Now, it won't just be any recovery, it's supposed to be a green recovery as well as digital, but green is the big driver a lot of the time. EU legislators here in Brussels recently managed to complete the recovery fund of 672.5 billion euros. So it's no small feat there. And the way that that works, very briefly, is that governments in the EU will submit national recovery plans, and the Commission will have to decide whether they're good enough and green enough in order to get the recovery funds. And there are specific targets here. Specifically, when it comes to the national recovery plans, governments have to come up with projects that finance that the recovery money will finance 37% of those green projects. So this is the big question. So we come to the big part of this discussion, which is what is green? Well, luckily, the European Commission was looking into this subject before the pandemic hit. So aren't we lucky? Well, we'll see. So getting to that, I would like to introduce my panelists, and the way that I'll do this is making sure that when they come up on screen, if I just ask our panelists to give us a quick wave so that the audience knows exactly who is who. In no particular order, I will start with Alexandra Makczynska, who is the Executive Director of Better Finance. If you just give us a wave, Alexandra.
Thank you. Hello.
Hi. Moving on, then we have a European Parliament member for the Conservative Group, which is the European People's Party. He's from Romania. He's also one of the men who, or one of the people who worked on the Recovery Fund when it came to the Parliament's position. This is Siegfried Mureşan. If you could just give us a wave, Siegfried.
Good morning, colleagues. Nice to be with you.
Thank you for being with us. Then I will also then introduce Waqas Samad, who is the Group Director for Investment Solutions at the London Stock Exchange Group, and also the Chief Executive of the FTSE Russell. And last but not least, we have Giulio Federico, who is the European Commission's Head of Unit for the Recovery and Resilience Task Force, who will obviously have to deal with the question of what recovery plans are up to scratch or whatnot. If you just give us a wave there, obviously, Giulio, hello, nice to meet you there. So thank you all very much for participating. I think the one big way that we can get into this is by tackling the question of the EU taxonomy. Now, to those people who don't follow the subject as closely as we do here in Brussels, it's an attempt to come up with a list to define what's green. So this should be a great thing. Or is it, Waqas? Could you just give us an idea of where you stand on this particular initiative?
Well, I think it certainly is a great thing. Thanks for starting with me, Bjarke. I think it is a great thing. This is a really exciting and developmental time for sustainability and sustainable finance in general. And what I think our experience is, we're in a sort of unique position where we're connected very much with issuers and investors in the London Stock Exchange Group, because obviously as an exchange, we are helping issuers connect with pools of capital, but as an index provider business within the exchange, we're also connected with investors who are trying to provide that capital. And what we're hearing from all of those constituencies is that there needs to be more data, that the data needs to be better quality, the data needs to also be more standardized, and standardization is something that people are keen to try to push towards, because there's a lot of different types of data out there. There are thousands of parameters that people are measuring, and there's a lot of discussion around whether certain parameters are material to certain sectors. How does that materiality work, and also are they relevant in terms of risk management, or indeed in terms of assessing opportunities for investment in the green economy for end investors. So having a dialogue and a consultative process around defining a taxonomy to try to move towards some sort of standardization about what is green, what is positive impact on the climate scenario, I think is definitely welcomed by all those constituencies, investors and issuers alike, and by providers like ourselves. But I think it's a step along the way, and there's a fairly long way to go.
So when you say it's a step along the way and there's a long way to go, where are the points of contention for you?
Well, I think in terms of the models that people are trying to define, we ourselves have our own green revenues model, which we've aligned to the taxonomy, but we're not alone. There are other providers in the market. There's a lot of dialogue at the moment in the investor community, especially, to figure out what is material, which parameters that people are trying to measure are material, and how should that impact on their view of risk and their view of opportunity in the market. So I think it's a step along the way, which is a positive step, because it attempts to put together a framework. The taxonomy work attempts to put together a framework for defining what is green and what is not, and that's a framework that providers like ourselves and investors and issuers can use as a framework within which to develop their own models of materiality and risk. I think that's work that needs to be done. There's research and development work that continues to need to happen, and I think that it's important that the approach to defining a taxonomy in a sort of regulatory environment should remain one that enables people to continue to innovate and develop models as time goes on. It shouldn't be too prescriptive. It should be flexible enough to allow for innovation in that space.
Okay, so a call to flexibility there, not too prescriptive. I'd like to move to you now, Alexandra. I mean, I'm curious to see what you think about this call for flexibility. I mean, obviously we're on a ticking time bomb here. Climate change isn't going to wait on us to sort ourselves out, and the Commission is also still in the process of coming up with specificated measures to the taxonomy that'll spell out exactly what they're thinking on this space. Just how ambitious do you feel that we should be, and do you think that there is room for flexibility?
Thank you. Just maybe one word. I'm representing here Better Finance. Better Finance is a federation of financial services users and individual investors. I would agree with most of the comments that have been just given by my colleague. When it comes to taxonomy, we think there is still a long way to go. We are going in the right direction. When it comes to flexibility, I would advocate for a reasonable amount of flexibility and a high level of ambition. We are seeing this with many different proposals and projects of the European Commission right now, that not always the level of ambition is adequate enough. And here, for example, the EU Eco-Label project would be one when we would definitely wish for a higher level of ambition than the current one. When it comes to taxonomy, we definitely think that there has to be a lot of consistency between different legislative actions right now, and no silos approach. So what we really need for individual investors is clear, understandable information. I agree also that there is not enough data, but even if the data is out there, for example, when you look at the ESG ratings, the data is there. You could go to different providers of ESG ratings, and then you can, as individual investor, discover that when you look at the same company, you get different ESG ratings on that. It does not really make your choice or investment decision much easier. So here we definitely very much support the recommendation and the plea from ESMA to have a regulatory framework for ESG rating providers. One very important issue that is very much connected to sustainable investments, apart from defining what is green and what is not, this is definitely extremely important part, it's returns. And I think we really have to face it that a major pinpoint of sustainable investments is the returns for individual investors. We hear every now and then a recurring theme of forsaking returns for the greater good, because we are investing, for the greater good. For us, very important.
I'd like to get into that, but maybe a little bit later, Alexandra. So not to jump too far ahead, but we will come back to that, and I think it's going to be a really fun topic to get into. If I just move to the politics side of it, Siegfried, before I let our commission official, Giulio, get to this particular point, where is it that you stand on the taxonomy?
Look, we in the European Parliament, we see it as a set of principles. That is what we know so far. There is a regulation which establishes a set of principles, firstly. Secondly, it does so for the private sector. It does not do that for the public sector, neither does it do this for EU public spending. But we are committed from the Parliament side to make sure that the money, public money that we spend at the European level are also going into greening. We are seeing that 30% of everything that the EU will spend over the next years should go into green projects. A bit less than 30% from the EU budget and 37% from the newly established Recovery and Resilience Facility. How will we make sure that this happens? We have agreed a tracking methodology to be established for the Recovery and Resilience Facility to make sure that what one labels as green investment is really green. And then we were also thinking on if, how, and when to link this new Recovery and Resilience Fund with the taxonomy. There were calls in the Parliament who said, look, there should be a strong link, but the only thing that we know so far is the taxonomy regulation, which basically establishes a set of principles, the exact methodology, indicators, and so on. The European Commission is to establish through a delegated act, which was nowhere when we adopted the Parliament's position on the RRF, and was just adopted as a first draft for a consultation phase when we gave the final vote on the Recovery and Resilience Facility. So what we did was we tried to include some of the principles from the taxonomy regulation also in the expenditures from the EU budget. For example, the do no significant harm principle, which says very clearly that investments done should not harm significantly the environment. And we introduced this, Bjarke, as a mandatory criteria for all investments in all 27 member states under the Recovery and Resilience Facility. Okay. If any of the member states presents to the European Commission an investment plan which includes investments that significantly harm the environment, then this plan will have to be rejected by the European Commission, and the Parliament will also keep an eye through the scrutiny that we are doing. So we are also committed, besides the efforts that the private sector will have to make under the scrutiny, under the taxation regulation, we are also committed ourselves to spend as much as possible on greening, because what for sure wouldn't be right is to set high targets, difficult to achieve by the private sector, but not provide the resources, not provide the incentives to transition to a greener economy, to research, to invest, to innovate. This is why we say we're also doing our part. We're spending a significant amount on greening, and we want to make sure that that really goes into green projects.
Great, thanks. Let's move to Giulio then. You've heard it here from the market, from from everyone on the panel, effectively, that there is an expectation that we're going to be sticking to principles right now. Could you I don't know, get into a little bit of detail there? How prescriptive will you plan to be when it comes to the EU taxonomy and national recovery funds plan? Sorry.
Thank you, Bert. And thank you very much for the invitation. As usual, the usual disclaimer, I speak today in my personal capacity, not on behalf of the Commission. Indeed, we've, for the last few weeks and months, we've been heavy sort of users of the taxonomy in many ways, because as it was also just been said by the representative of Parliament, the taxonomy, the principles and the framework features quite prominently in the architecture of the plan, in the green architecture of the plan, in two ways really. There's two real main pillars of the plan around green. One is the target that you mentioned already and has been mentioned already, the 37% target, but also the do no harm principle based on the level 1 legislation of the taxonomy. Now, those two principles interact with each other. It's very important. I think we're also seeing it in our interaction on the plans, is that whilst almost 40% of the plan has to be green, so contribute to climate in particular, so actually that's a climate tagging methodology, and on top, do no harm to the other 5 or 4 objectives of the taxonomy, the rest of the plan, so up to just above 60% maximum, nonetheless needs to comply with do no harm. So it doesn't have to be green in the sense of making a significant contribution to a climate or environmental objective, but shall do no harm to any of the 6. So that's a use of the taxonomy. It's taking Article 17 in isolation from the rest. So it's in that sense, it's a specific use for this facility to ensure that the entire funding, not just the part that's sustainable, but the entire funding is also sustainable in some way. It doesn't do harm to any of the objectives. Now, to your question, how prescriptive or specific? Well, I think again, there's 2 strands here. We try to align the climate tracking methodology where possible to elements of the taxonomy, of the most important elements of the taxonomy. And indeed, there was a discussion in the trilogues, which was very helpful in that regard. And the final methodology that is annexed to the regulation and was published, officially adopted a couple of weeks ago, it tries to the extent possible to use the granular elements of the taxonomy, which were designed for project financing by private investors, to apply them to broad government spending that will be contained in the plans on an ex ante basis. So you have to adjust the approach. I think this is a lesson probably for other public investors and sovereigns that try to adjust to the taxonomy, but it's possible to make those links and actually improve the climate tracking methodology to make it more robust. And that's something we've seen, I think, in practice in the work on the regulation. And then on do no harm, which is this broader principle applying to all measures, not just green measures, but all measures. As you know, I think, and also following the dialogue with the trial with the Parliament and the Council, the Commission was tasked to produce specific guidance on the do no harm principle for the purposes of the RRF, which was published again a couple of weeks ago and adopted in the official journal together with the regulation. That guidance, again, is the same principle. It tries to apply level 1 legislation, that framework. It tries to draw some inspiration from the more granular work in delegated acts as well. Of course, they're doing a draft, but some of the framework is useful and tries to guide member states in the application of the do no harm methodology to all 6 objectives, and trying to simplify to the extent possible that approach in the context of the RRF, which is a very specific context. It's a facility that will fund the projects for the next 5 years effectively. So it's a relatively short to medium term recovery and resilience facility, and also is one where, of course, there's not a huge amount of time for the preparation, with the dialogues ongoing with the member states, who of course started in many cases well before Christmas, and do no harm was part of those dialogues. But now, of course, with the guidance, we can be more granular and more concrete. So I think, I mean, again, as I said, we've turned users of the taxonomy as part of this process, but it's been a very useful framework for the issues to ensure that this recovery plan and this amount of money that you mentioned, Bjarke, was of course very significant, is sustainable, can contribute to sustainable recovery. So I would say our experience has been to date on the framework very positive, and without it would have been very hard to structure the facility in the way we have done it.
Okay, thank you. Kwakwas, I'll just move to you very quickly. I mean, obviously, what we do from the recovery fund standpoint might set a precedent. You know, we're talking about kind of using it as a framework for now, but obviously there's an ambition to get granular. I mean, how do you feel about that, being the sort of the marketplace platform?
Look, I think it's important to get detailed. It's important to get as refined and evolved as possible in defining that framework, but it has to remain a framework. It's going to be useful as a framework, not as a solution, not as a database. And therefore, it has to be a framework that enables providers like ourselves, investors, issuers, all different types of market participants to use it to develop their own models and do their own assessments of risk and risk and opportunity. So I think we definitely welcome the effort. Obviously, we've participated in many of the consultations and provide a lot of contribution to from our experience on how to shape this to shape the taxonomy, and we see that very much as, we hope that's very much an ongoing effort to continue to consult with the market on how that should evolve. I think that we'll refine it and develop it further with experience, and I think it has to be one of a number of different potential solutions within the marketplace for people to use in either shaping their portfolios or deciding how to change their operations as a company that operates in the market. So, I think it's going to be an ongoing evolutionary process. I think it's great to hear that from the other panelists that they also consider this to be a framework, to be principles based, and that it's at the earlier stages and still has to evolve, and we'll continue to participate in helping that to move along. We as a group, as an exchange group, are involved in a number of different initiatives to try to move towards more standardization. Mm-hmm. There are plenty of initiatives going on around the world. We just would like to encourage people to continue to collaborate with the market, but also collaborate internationally and try to make sure that there isn't too much divergence of these emerging standards across different regions.
Thanks. I think we touched on the lack of data beforehand, but I would like to jump into that just a little bit more. But I think one thing that might be interesting to our audience, and Joaquas, maybe you can help me out here, given the fact that a big part of the London Stock Exchange business now is also with Refinitiv, is data collection and also creating new indices. In your experience, just how difficult is it to gather data on what would then be considered green? In terms of practically speaking, how does that work?
It's difficult because of scale. You need to cover as many of the companies as possible, and globally, because obviously investors are now all pretty much global actors, and they need information on companies globally. So you have to be able to gather the information from companies all across the globe in all sorts of jurisdictions in every single sector. So that itself is a large data management problem, but it obviously is dependent on disclosure of that information from the companies. So there is a lot of very welcome action from market authorities and regulators around the world to encourage disclosure from companies, public and private. Exchanges like ourselves, exchange groups like ourselves, are involved in those kind of initiatives. We're really prominent actors in the UN Sustainable Stock Exchange Initiative, which is aimed at helping and encouraging issuers to disclose along the lines of TCFD and ensure that there's good quality disclosure that comes from the issuers, because it's that disclosure that then enables data providers like ourselves to aggregate that, clean it up, build models of materiality, of risk, of opportunity, of green revenues and so on, informed by things like the taxonomy. Mm-hmm. And then make that available to investors around the world. It's a difficult process because of the scale. It's a difficult process because all of those things like models of materiality and so on are still evolving. And it's a difficult process because disclosure is still not uniform. The requirements to disclose are still not uniform across the globe, and there are evolving standards around disclosure. Mm-hmm. But that's the nature of the beast. As I say, it's an evolving space, and it is great to see action and activity from all quarters, whether that's investors, issuers, or regulators, or exchanges, in each of those areas to advance the agenda. And so all of this work is very welcome, and we try to participate in as many of those as possible.
Great. Moving back to you, Alexandra, I mean, you also touched on, the fact that there is no data out there, or very little of it, I should say. I mean, does it matter right now? I mean, we're talking about frameworks, we're talking about like getting started. I mean, is it a concern that there isn't much data out there for now, or are we opening the door towards greenwashing?
Yeah, well, I think would definitely like to avoid greenwashing, and we're happy to see that regulating greenwashing is quite high on the EU agenda. What we think right now, it's quite needed, and we don't think from like individual investor point of view, there is now really the need to reinvent the wheel. We think that disclosures for individual investors must be, clear, simple, short, concise. The data is a problem. We also hear it from market participants, but the legislation needs and actually is already seeking really to dig deeper into whether the financial products are sustainable investments or not. There are different legislative pieces already in place. It is for the time being a framework, but we think it's extremely really important to standardize ESG information across pre-contractual documents. And the disclosure really must be comparable. So it must really reach the highest degree of standardization across levels, and standardization must concern not only the type of information to be included, but also the order flow and format. When it comes to the data, as I said already, and it also comes and is visible in our research that we are finalizing right now as Better Finance, so the research on sustainable investment funds, where we see that even if some of the data is available, like the ESG ratings, as individual investor, you really struggle to figure out whether the company you would like to invest in is really as green as you would like to, because when you compare it between different ESG rating providers, it seems that for some reason they are being rated differently. So that's why we think some of the initiatives are still to be seen, and we would really very much welcome within the renewed sustainable finance strategy to see a regulatory framework, for example, for ESG rating providers.
Thanks. Siegfried, I'm going to move to you now. I mean, when we talk about, these national recovery plans that need to be sent into the Commission, I mean, not every country can immediately switch to green as we go along. And I mean, you're from Romania. I'm just wondering, I mean, do you see particular challenges in being a little bit too, or any conflicts that could arise from demanding too green or high ambition when it comes to the national plans?
Yes, absolutely. The realities in the 27 member states of the Union are different, and we need to take that into account. And there is consensus in the European Parliament that we need to take that into account. Different political groups see, a different degree of strength, between the taxonomy regulation and, for example, the RRF. We in the EPP group will say, look, that's primarily linked to the private sector. It's difficult legally to link it too much to public expenditure or to expenditure at European level, but we are ready to include the principles of it. And then let's see about the delegated acts, about the concrete indicators, and so on. Other groups would have wanted for a stronger correlation there, but we are all united in saying realities in the 27 member states are different. We need to take that into account. For example, there is consensus that we are going to transition from coal. but one cannot shut down coal and gas at the same time. So gas as a clean, modern technology still is a bridge builder and a source of energy of transition up to 2050. And so we need to see how we organize the taxonomy regulation in a way which is not too tough, too restrictive, in such a way that one can really not invest into gas as a source of energy of transition, because this is really needed in many member states as they transition away from coal. This is the first thing. Then secondly, also when it comes to the Recovery Resilience Facility, we are committed to a thorough tracking methodology, as I said in the very beginning, and we're expecting the European Commission to bring forward a delegated act in the first part of the year, so that we know exactly in each of the member states, when it comes to the national recovery and resilience plans, to what extent the green targets are really taken into account. And then globally at the European level as a whole, when it comes to borrowing the money for the 750 billion next generation EU, so it's the whole package following the coronavirus, the Recovery and Resilience Facility, plus the smaller programs of support, green bonds are important. So we are ready to make sure that when the Commission borrows at the markets a certain amount of the money, we are committed to invest into green expenditures. For this, obviously, we need a certain methodology for reporting from the side of the member states, and we are also committed amongst the three institutions, Commission, Parliament, and Council, to look into that, to establish that good link with green bonds in the context of Next Generation EU.
And that segues perfectly when I then move to you, Giulio, and to talk about green bonds. I mean, this obviously is a subject that everyone on the panel will find particularly interesting as we draw our discussion, sadly, to a close. I mean, one of the things that's particularly interesting about the green bonds debate is that the Commission is planning to issue or fund 30% of the recovery fund with green bonds. Now, we don't have a proposal, we don't have a draft, we don't have a bill that we can have a look at, and yet we're supposed to be sending cash out even this summer as pre-financing money, and not just a little bit of it. So, I mean, I don't mean to be too forward, but I mean, what were you thinking? I mean, you as a Commission, not you as Giulio, but what were you thinking when you announced something as big as that without actually having the proposal or the legislation in place?
Thank you. Well, I mean, I think we are committed to that 30% green bond issuance. I think what we discussed so far in the first half of the panel lays the foundation to enable a robust green bond issuance. And I think it's going to be fundamental. And indeed, some of the strengthening we've seen on the regulation in this area on tracking and on do no harm, and then the actual application of it in a rigorous way will be critical to enable the green bond issuance. So, as has been said, there's been a joint declaration by the Parliament, the Council, and the Commission in that direction. Of course, one of the main issues is indeed reporting requirements, and to the extent to which, I think we have the foundations for it in the regulation and in the plans. The question now is, and that's what we're working on now, is establishing the best methodology and tool to enable those reporting requirements. We also have experience from the shore issuance in terms of the framework. So that work is ongoing. Indeed, there's not much time, but with the recovery facility, there's not much time on many of the aspects we're working on. But that work is ongoing along the lines of the declaration that was made in December when the regulation was finally agreed.
And can you update us with any details about what it is that
the third pillar of the green architecture of the
provide?
I'm sorry?
Yeah, there seems to be a slight connection problem with the link. I'll repeat the question again. I'm just wondering if you can give us and apologies if you were just about to do this, but can you give us an update on where we are with the initiative of green bonds?
Well, what I can say is that the main work is working on established green bond frameworks that are out there already. So using those frameworks and then focusing in on reporting requirements. I'm afraid I can't go beyond that. That's really ongoing work that our colleagues from other parts of the Commission are following closely. But this is very much the ongoing work within the timing that was agreed in the declaration on with the regulations. I'm afraid I can't give you much more detail at this stage on that.
Okay. I would like to just check in with Secret very quickly. I know that you're about to leave very soon. I mean, what's interesting about the green bonds is that there's very little reference to it in the legislation for the recovery fund. I think it's been reserved for an annex. I mean, how does this then fit in your view?
Look, fact is, when the Commission presented the draft methodology, they did not present any reporting requirements which would have been much needed. So neither the Parliament nor the Council really foresaw a place when we adopted our positions in the legislation. Then the Commission said, hey, look, we forgot about this. It's an important thing. We need that reporting methodology in order to be able to go to the markets for what we call green bonds. We need to know exactly what the countries spent the money on, and they need to report properly. Obviously, then we looked into it in the final phases of the negotiation of the RRF. The Parliament was more open to it, but the member states said, look, we can't commit overnight to that. So there was a joint declaration by the co-legislators, the Council and the Parliament. The Commission was there as well. And now we have that joint declaration which says that in the first quarter of this year, the European Commission has to put forward that tracking methodology. So we are looking forward to what they are going to put forward, so that then we can proceed to the issuance of green bonds. We are all committed to that. There was a joint declaration by Council, Commission, and Parliament. And that being said, Bjarke, I will have to excuse myself. I have to speak at another event at 11:30. Once again, really, thank you very much for inviting me. It was a pleasure to be with you.
Thanks for joining in. I think it would be good to move back to Huacas right now. I mean, with the idea that we'll have green bonds, I mean, this must be something that you're jumping for joy for, right? I mean, green bonds on the market, it's a small one. This is good news, no?
Well, it's good news because, politics and so on aside, I can tell you that there's demand, certainly in the investor community, for more issuance. Some of the biggest actors in this whole space of sustainability is the asset owners, the pension funds, sovereign wealth funds, and so on. We're engaged with many of them as investors to help them to set benchmarks, to develop models, to develop their strategies for transitioning into a more sustainable set of portfolios. And they want to do that across asset classes. So obviously we've talked a lot about the taxonomy, and we've talked a lot about issuers from an equities perspective, but from the fixed income point of view, a lot of those asset owners have great demand to try to move their fixed income portfolios into more sustainable investments. But the green bond market is still relatively very small. It's gone past $1 trillion globally in amount outstanding back in December, roughly. But it still remains relatively small. We've seen, obviously, in 2020, I think, an uptick in issuance of social and sustainability bonds. And we launched some capabilities on the exchange to support that, and have a segment and a set of activities around encouraging issuers to list social and sustainability bonds. We've also got a green economy mark, which enables issuers to be recognized for their efforts in the sustainability space. But the green bond market still remains relatively small, so any efforts there to encourage issuance, I think, are going to be very well received by the market.
Alexandra, you mentioned how we could make sure that green actually delivers a good return to investors at the beginning of the panel. I'd like to pick that up, but maybe just in a slightly different, nuanced approach. I mean, Huacas just mentioned now the fact that the market is just so small, even though these new issuances will come along. I mean, given the fact that demand could outstrip supply, do you think that there is a real risk that we'll be heading towards a green bubble?
Well, I'm not quite sure. I mean, when it comes, for example, to the green bond market, of course, it's growing. It's as it's been said, it's not yet that big, but it's growing. But I think we have to face and also think about issues that are, in a way, affecting this market and also potentially eroding really consumer and investor trust. And when it comes to green bonds, I think ensuring really transparency on the underlying assets is really fundamental for this market, and for the market to reach the scale and to reach its objectives. So what we think, what would be really crucial right now, it would be to have specific and really credible guidelines on how to identify and classify green projects based on evidence, to really prevent any possible greenwashing and ensure really that green bonds are trustworthy. I mean, we really have to remember, I think sometimes we really forget that the very big issue that we have in the financial market in general, and it also affects, of course, sustainable investments, is really the issue with the trust of investors and consumers. So I think we have to address it first before thinking about any further objectives and potentially even a more growing market if we want individual investors to invest in green bonds.
Great, thank you so much. I'm going to move to the poll now, just very quickly, given the fact that we are coming towards the end of our panel discussion. As mentioned, this is all about what will the most important piece of EU legislation, what greatest impact will it have? And it seems that we're looking at the taxonomy, which obviously was the big topic of the day. So I'm glad that we kept our fingers on the pulse and discussed that in a little bit more detail. The non-financial reporting directive is second, and then green bonds. I'm glad that we tackled all those issues. I think it's very good that we managed to learn today that the recovery fund will sort of use the taxonomy as a framework moving forward, and that obviously the lack of data now will be addressed as we go along, but for now we're sort of not being too prescriptive and allowing for some flexibility in the markets. As I mentioned, data is still an issue. We need to start putting that together, but I guess that'll happen over time. And then to your point, Alexandra, of course, we need to make sure that the importance of trust in green investments is maintained. With that, I would like to thank all my guests very much. Siegfried did leave a little earlier, but otherwise, Alexandra, Joaquas, and Julio, thank you so much for taking time out of your day to join me here. It was a lot of fun, and I think we all learned something out of that. Now, for everyone else, there will be a next session, which is a panel discussion which will dive deep into the topics of capital markets in the European Union, and will be moderated by the fantastic colleagues that I have here in Brussels, Hannah Brenton. That will be beginning at 12:20, so that's after the lunch break. So do make sure that you get a good morceau, as we would say here in Belgium, and also use those 45 minutes to network with your fellow attendees. And you can do that through the many features that we have on our app. You can send connection requests to other participants. You can chat with them, set up calls, and create discussions and relationships with potential future collaborators. Perfectly scripted. With that, I thank you all very much, and I wish you all the very best. We'll see you soon. Take care.